Welcome back, guys. So, in the previous video, I showed you the relationship between time and price and about price movement to retrace or to continue its movement. And I close by showing you that there's a level price get to that it then reverse if it is retracing to continue going in the right direction. And I promise that I'm going to show that to you in this uh, video. Now, let's get right into it. This will take us back to where I started from when I said our price move. I said price move to take out an old high, old low, or to balance an imbalance, right? Good. So now, if price is trending higher, it means that price will be taking out old highs, old highs, old highs, old highs, or to rebalance an imbalance above it, right? Now, if but what price is retracing, like what I put from here now to here is a retracement. Where do you expect price to stop to get to and then stop retracing? From here now, down here was a retracement. Here to here as well. So where do you expect that price will get to and then stop retracing and then just continue this movement, the normal trend, original trend? And this will then take us to the next thing, which is uh, premium and discount levels. Premium and discount levels. Now, this is quite important on your chart, very important. You see, the logic of this market also apply to your normal day-to-day activities. When you go to your supermarket or go to any market, any store, you love to buy something at a very cheaper price compared to its original price, right? And then you want to sell something, you would love to sell it at a very higher price, except you are doing what we call uh, uh, stress sales or more like emergency sales. That's usually when you sell very cheap or promo sales. But in normal selling market, you want to sell price something at a very higher prices, and then you want to buy it at a very cheaper prices. That is, that is when you see companies announce that a promo sales, it tends to have massive demand during that period of time because human nature love to buy something at a very cheaper price compared to the original value, original price. Once that thing is truly valuable, they love to buy it at a very cheaper price. Now, smart money guys, they program the algorithm to the same thing on your chart. Okay. Now, if you measure it, you have this an old high and then an old low right there. You have it clean. If you use this rectangle box, if you check there, you can see it right there. This is right there. We measure it is high to low, down to the low. If you click on it, settings, if you click on this middle line to show like this, we have right there, it shows. Then drag to the right, you can see. Now, look at what happened. Price was selling and then began to retrace from here down. Now, this middle line here is the 50% of this range. That is half of the entire move. Now, below this half, is a discount level. Above it is premium level. So it means that price will trace to premium level and is sold off of it there. Now, of course, price did not just touch the premium level and then sold off. It touched something at that level. Now, what it touched is called a key level, and that is right there. This old low plus this bullish order block right there. You can see that is what this price touch right here and a reverse from. So having explained that, let me now go deeper into this key level. There are key levels on your chart that when price get to, it tends to respect them. Okay, it tends to do what? Respect them. One of them is the imbalance level I told you about earlier. The price seeks to rebalance an imbalance. So if price is retracing and it touch an imbalance level, it can then reverse from there and continue it is normal bullish or bearish move. Example is where here price was retracing from here down up to this place and then it touched this imbalance right here and it did what? It continued, it reversed and continued going lower to continue its original move, right? Here too, you can see this imbalance clean, price retrace to it right here, touch it and then reverse and then continue going lower. So here's the thing. One of the key levels on your chart you have to pay attention to is an imbalance. Now, you don't have it here. So the question is then what is price really touch right there? What did it really touch right there and then reverse from? Well, an old low to the left here. I don't want to confuse you, go into more details, but I want to stay with just giving you two key levels on your chart, which is basically an imbalance, old high or old low. There are more to there are more levels, right? But let's stay with those two levels. Then from there you can go further. So this is a low, right? Why? Because this high was formed by this low. This low retracement right there led to this high. So when price broke this low, this place become an old low. An old low simply means a previous low formed by price. When price broke it, price can return back into it to retest it. That's what happened right there. Price return back right into that old low here. So when price does that, this old low will then serve as a form of resistance for price. Why? Because there will be orders set in place around that region by the smart money guys, which that price will pick and then reverse going lower. So this entire range from here to here at premium level is a key level that when price touch it, it can then reverse off of it. Now let me show you an example. From here to here, price was bullish. It took out these highs, almost equal highs, right there, 1, 2, here, close above it. Then price then retrace, touch something here, and then continue going higher. What did it touch? Let me show you. Look very well. You have an old high here. Price touch that old high here, and then it reversed and kept going higher. So this old high turned to a support level here, and the price began to go move higher off of it. That is it. Let me show you an example again. We have this low broken here, close below it, then price began to retrace, and then retrace back to touch that old low. This old low right here. Then did what? Reverse. If this old low did not stop price from reversing, then what next can stop price? We have an imbalance here, clean imbalance, this one above it. Price can touch it and then reverse. It's as simple as that. Let me show you more examples. Now, at that time, when look as if price did not look by that, yes. Why? It's my money, guys, as well. You see, nothing works 100% in the financial market. There is no style of trading strategy that works every time 100% without failing. There are times you get it wrong. There are times price will not respect your key level. It's all right, it's all normal. So you will lose and it's all fine. This is a losing game. The best loser here wins. Okay? That is, when you lose in anticipation of losing. Therefore, you do not risk too much on a single trade. You know that a single trade can go anywhere. It can go against you. You can lose money in that single trade. This will take us to risk management later on. But let's continue right now. So price took out this low here, close below it. Let me mark it for you. Close below this low here. And the price then retrace, touch this imbalance. So clean multiple times and then reverse. And then it kept going what? Lower. Here also, price took out this low here, close above it. It then retrace back to test that old low here. The single candle. This old low was tested here. And the price kept going lower. Here to a lower low, price will test this imbalance right there, and it kept going lower. So either price retrace to test an old high or old low, or to test an imbalance. That is why price retrace. So I hope this is clear. Let me show you my example on daily time frame. You can see here, price broke this high here, and then close above it. Right here, and the price there retrace to test this imbalance plus this old high here. Everything was retested. Both of them was retested at the same time, and the price reversed, going higher. Here to have this high, higher high. So price broke this high, right? Close above it, and the price will trace to test this imbalance plus this old high to the left here, and they continue going higher. Here too as well, high, higher high, we trace to test this high, lost this imbalance at the same time here, and then went higher. We have now have another retracement to retest an old high here, this old high here. Will it go higher next? Yes and no, because we're now at a key weekly level, and on weekly level, price already gives sign that it want to continue going lower back because we are actually bearish here. Now, later in the next video, maybe I'll talk about time frame synchronization, price how price time frames synchronize together and flow together. But for now, let's stay with this concept. You can see here too, price broke this low here. We trace here to test this low here. It will test it right there and here too, multiple times, and then went lower. Broke this low as well here. We test this perfect old low here, loss imbalance here, here, and then we'll continue going lower and like that and so on. So it's as simple as that, guys. Quite simple. Price broke this high here, close above it, then we test this old high here. You can see. Let me mark it very well. This old high to the left was we tested right here, and price kept going higher. So it's as simple as this. So please go to your chart, go and backtest each of these concepts, each of these videos separately. Pick one of the videos, backtest what I showed you in one of them, and then when you are done, you move to the next video as well. You also backtest that one too as well. That is how to grow and how to develop yourself in this industry. So once you do that, I would love to hear from you, hear your comments, receive your feedback, and then we can then move to the next topic in this style of trading. Thank you. See you next time. I love you.